Let's talk some markets. Alan Nuckman has the trade of the morning. He's at the CBOE. He's the chief market strategist at Agora Financial. Alan, you're going local today. You're trading a stock that's based right here in Illinois.
Well, I'm looking for a commodities comeback since it's been crushed, but let's talk about the overall market first, because obviously we had another record week last week. Stocks are streaking, and we've talked about the upside target in the S&P is 3,500 from that 600-point drop that we saw many months ago on that big sell-off. We still haven't seen the VIX dip back down. We're still stuck trading between 12 and 14 as we have been for a month. So that if it can push below that 12, then that target's 10, means a big upside push for stocks.
Yeah. All right. So big upside push, Alan. Where do you figure the target? I mean, because if we're looking at new highs, we don't have a lot of blueprint for it, but valuations we do have a little bit, right? Because we're getting pretty expensive, and from here we're starting to get back to the run up like December 2017 level valuations.
But there's still a lot of stocks and sectors that haven't participated. So if you look at CF Industries, for example, it's unchanged over the last 52 weeks. Compare that to the overall market. And for me, it's 15% off its recent high in August. So from a value standpoint, this is a stock that had traded between 40 and 45 for the first 6 months of the year. So now it's coming back to that 45 breakout point. You can lean on that. So we're about 45.50 right now. What I'm looking at, it's a strategy as much as it is this stock. So let's go back to last week. Last week we talked about Baxter. Okay, an in-the-money option on Baxter for December has some time, and it's going to reflect the upward movement of the stock, but you're going to get that exponential treatment and payoff. And so we've seen about a $4 move in Baxter, but the option's up nearly 50%. So that's the strategy that I use, the in-the-money calls, the stock substitution strategy. For this stock, the CF, I'm looking at the January 42.5 call. It's $3 in the money, and that option costs about $4. So you've got 2 months of time, a high delta of 72%, and it's going to give a healthy payoff when we see some modest comeback in the underlying stock.
So, Alan, just the backdrop here for the company, for those who are going, what the heck is CF Industries? This is essentially an agriculture supply company. We're talking fertilizer. So to your point about sort of the commodity linked and this kind of pseudo-reflationary trade comeback, to me, this kind of fits a little bit of that macro theme.
Right. It is more of a smart money play. You're seeing a lot of money flow into this particular company that's been holding its ground. Like I said, it's unchanged over the last 52 weeks. It is a nitrogen play. Nitrogen natural, they're one of the largest producers of nitrogen fertilizer made out of natural gas. Natural gas prices are low. Maybe there's some sort of correlation there that helps their profitability. But again, I think more so than anything, it's just a stock that hasn't participated in the big boom that we've seen in the overall market. So this is a way to play with limited risk. Again, the option is $400. That's your maximum risk. It's $300 in the money. And if there's a move back above the 50 level, it's gonna pay off very, very nicely, just like the Baxter that we talked about last week has.
Yeah. All right. 42.5 strike. Limit $5. CF Industries. Alan Nuckman, appreciate it as always. Chief Market Strategist.
Thank you.
At Agora Financial down at the CBOE. We'll be right back. We do have a lot of retail earnings this week. A lot of brick and mortar set to give numbers. Consumers been strong, but the brick and mortar stocks have not. We're going to try